And like, just how big of a company can Coinbase be?
That could lead them to over $100 billion of market cap tomorrow. That's how big of a business this is and how excited people are for this direct listing. It'll give people an opportunity to invest in the crypto asset space without having to figure out which specific crypto asset to invest in. So I think it could be as high as $100 billion tomorrow.
Trading volumes, I mean, have been going through the roof. What is it, 355 billion from 14 billion in the fourth quarter of 2020. So clearly this is a business that continues to scale. What's more important for Coinbase? Because the large part of it is the retail investor. And full disclosure here, my husband does work at Coinbase as a senior manager. So I know a little bit about these things, but just talk about whether it's the institutional investor that's most important or the retail investor for Coinbase as its backbone.
I think that's the critical question. Right now, most of the revenue and the profit is coming from that retail investor where Coinbase had a really good early start and continues to have the broadest clientele. But increasingly, it's the institutional investor that's driving the assets and the trading volumes and even the subscription revenues for Coinbase. And that's where Coinbase is particularly well positioned because they're established, because they're very compliance oriented, have been very secure, and have a nice brand to boot. They've been a good fit for institutions. And when we say institutions, we mean institutional investors. We also mean enterprise customers such as Tesla or Square. Coinbase has positioned themselves well to capture that increasingly important client base.
Well, let's talk about Coinbase as a public company and whether it becomes, I guess, by default, basically the proxy for Bitcoin itself and the feedback loop that that could potentially create. Is that good or bad for Coinbase in the long term?
So Coinbase will not be able to escape crypto winters. We've seen cycles in crypto where people get excited, adoption accelerates, and the asset prices go up exponentially. And then after those, usually there's a cycle where prices settle down, go down, and they stay at lower levels for a period of time. Over time, the growth has still been exponential, but there's crypto summer and crypto winter. Coinbase will not be able to escape crypto winters. When there's less activity in crypto assets, when there's less volatility, asset prices are lower, Coinbase's results will be lower. Over time, they'll benefit from that long-term growth, and they should have the same level of growth as crypto assets overall, but it's going to be more of an up and down situation than comparable multiple high growth stocks.
Let's talk about the competitive risk. So Coinbase has been very early in this space. It built a platform that was very regulatory friendly, feels very safe, and so forth. We haven't really seen in a meaningful way the established brokerages get into it. We haven't seen the adoption of an ETF that would allow someone to have access to Bitcoin via a traditional brokerage. Is there a risk either from new entrants or from incumbent financial players to take share away from Coinbase, basically?
On the consumer side, I'd say the risk is from Square, PayPal, and Robinhood. They're already digital wallets, and they've done a good job of incorporating crypto as an asset side by side with cash or side by side with stocks. On the institutional side, I'd point to Grayscale. It's a business that the DCG, which is a crypto holding company, started a while ago, very focused on institutional investors. They're also growing very quickly. But on the consumer side, which again is where most of the market is right now, I'd focus on those digital wallet providers. They get it, and they have the right customer base.
Gil, when you just went about analyzing this business, you say you have it in your note, March 2nd, Coinbase is introducing crypto's Amazon moment. And I want to understand the parallels there as to, obviously, what part of the business do you see as Coinbase really getting bigger and bigger? Because yes, at the moment they're an exchange, but they've sort of been doing stuff in terms of custody. They're looking at basically sort of becoming an all things to all crypto business. What do you compare it to?
Well, so the parallel to Amazon is to say that up until Amazon's IPO, the internet was almost a thing on the side that didn't impact a lot of other businesses, wasn't really in the consciousness as a big business. And Amazon's IPO changed that in 1997. And ever since then, every business has been transformed by the internet. That's the analogy I'm drawing here. Crypto's been on the side a little bit. It's been an interesting curiosity. When you have $100 billion market cap company tomorrow that all they do is crypto, it's going to become part of the financial system.
Yeah.
And a lot of other companies are going to realize that they have to adjust and adapt to how crypto technology is going to impact their businesses. For Coinbase to continue to be successful, they have to make that successful transition from consumer to institutional investors, to corporate enterprise, and at some point sovereign investors. And they have to continue to invest in the products that are more subscription revenue oriented, custody, staking. Those are the kinds of businesses that are going to stabilize the revenue so they can thrive even during a crypto winter.
So, but basically, we're talking about, and I believe we are getting the reference price right now here. We'll dig into that in a second and bring you the reference price. But Gil, when we talk about this, I also hear a lot, sort of in between the lines, what you're saying, additional costs, and then what about pricing power? How do they deal with that?
So additional costs, they've already talked about that. They said, in fact, Byron Armstrong in his letter said that he intends to break even in the foreseeable future. And he said that as he made $1.1 billion of EBITDA last quarter. So he intends to invest a lot in customer service and new product development, and that's going to be very important going forward. In terms of their pricing power, I'd say on the consumer side, it's held up fairly well. On the institutional side, what works in their favor is this sense of security. If you're a corporate treasurer that has to pick where to put their Bitcoin, you're probably going to want to put it in the place that's best known, that's the default, that's the most secure, and that's what's going to help their pricing power with the institutional customer base.
Now, the Nasdaq is just publishing the reference price for Coinbase ahead of tomorrow's direct listing. $250 is the reference price at the moment by Nasdaq. Of course, that's just a starting number, but it's quite a way off your 440 price target as it stands, Gil. So how do you think tomorrow's just auction late plays out? Who do you think are going to be the big buyers? How much sort of volatility are you expecting on the day?
A lot. I expect to have a lot of activity, a lot of excitement, a lot of volatility. It's a direct listing. It's not managed. The stock will be out there and it'll trade the way the supply and demand move it around. And it's going to be exciting. And I expect the outcome to be a favorable one. I expect the stock to do very well because there's a lot of excitement, a lot of pent-up demand to own Coinbase. But I reminisce to another important IPO, which happened in 2012, where another market leader in an open-ended category went public. Facebook transactions ahead of the IPO were at $40, and everybody was so excited. And the stock opened at 20 and ended up at 15 a couple of days later. So that is a possible outcome.
Yeah.
But I expect tomorrow to be a good